Do you know why most traders fail? Well, it's not because they're not smart enough or they haven't got the right resources. It's because they ignore one simple, very easy to use formula and they're not using it properly. Now, in this video, I'm going to reveal the formula that 90% of traders out there overlook, which guarantees failure. Well, that formula is the risk-return ratio. And when it comes to trading, understanding the risk-return ratio is everything. It's the cornerstone of any successful trading strategy. It tells you how much you stand to gain for every dollar you risk. The simple formula, and it is really simple, can determine whether you're headed on the path to success or failure. And the biggest thing that I see, the biggest mistake I see with this application of this formula is most traders just use it for that simple one-off trade that they're focused in the micro of their trading. What they're not doing is using it properly in the bigger picture to make their trading a lot more successful, and also taking them out of that danger zone. So like in this video, I'm going to take you through how the formula works and how you should be using it properly. Some of you may be familiar with the formula anyway and have seen it in other YouTube videos, but I'm just going to put it out there so we can all start from the same page. The formula: potential profit divided by potential loss. It's as simple as that. And if you can't get that, I'm going to be a bit harsh now. Give up trading, go and find something else to do, because it really is so simple. Save yourself some money, find another hobby. Now let's just look at a quick example just to cement that idea. So you're risking $100 on a trade to potentially earn $300. What is the risk reward ratio? Well, very simple. It is just 1 to 3. But let's have a look at that on the charts, and I just want to highlight some of the other sort of mistakes I see people traders doing when they use this ratio. Now I've got a simple gold chart here, 5 minutes, some candlesticks. It's on TradingView, nothing special, but I'm just going to illustrate the risk reward playing out and some of the mistakes that I see going on when people are trading. Now TradingView does have its own risk reward type calculation. Let's just put it on. So for whatever reason you've decided to buy gold and you're going to buy it, and you've called it perfectly at the turning point there of that short downtrend that we can see hitting there. So we're going to set the parameters of our trade. Now let's just say the rules were we were going to put it under the low there, and then we were gonna, and we again called it absolutely perfectly and got out of the top, well, just about the top of the trade. Let's just narrow that down a bit to about there. That viewers is a 3 to 1 risk reward trade. So the red shade there is the potential area that we would have lost in there, and the green is what we made. But first big mistake, so when people are going, well, yeah, if I do a 3 to 1 risk reward trade, and I'll keep doing that consistently, then I'm going to be a really successful trader. First mistake is that I see people, they hang around with their trade, ignoring their rules, waiting for that 3 to 1 to actually play out, when in fact actually it only ever got to 2 to 1 before tanking all the way down, and they end up actually getting knocked out and losing the trade. That is one of the biggest mistakes I see, and that is why I'm putting this video together to show you the bigger picture of using the risk reward and how you can structure it into building a much better strategy and trading plan. So if you just holding on to this, like I said, a fixed risk return is quite difficult and very often does not achieve those targets. So you've got to have the rules in place for when the trade goes out, that maybe you are taking some profit, or you're moving your stop loss to break even, you're trailing up the stop, waiting, especially for new traders who think that's the golden ticket get your risk return sorted and everything else fall into place. Often, very often, it doesn't, and that's a big problem and something you've got to get sorted early on. But understanding that in that micro trade level, which I mentioned earlier, is hugely important for the macro usage of the risk return ratio. So what am I trying to say by illustrating that in the charts there? What I'm trying to say is it's all very well and good, having a risk reward ratio set out from the start on your trade. Very good. But what most traders do is they stumble from one trade to the other. Yes, they might win 2 to 1, or they might win 1.5 to 1. Then the next time they lose, and then the next time they lose again and lose again, or maybe get really frustrated from the numbers. What they're not doing is putting that data together, and they've made 2 mistakes. One is backtesting. They should, before committing money to the endeavour of trading, do some homework, do the due diligence on your strategy ideas, go and backtest the data to work out what sort of risk reward ratio you should be obtaining on your strategy or trading idea. Maybe 3 to 1 is far too unrealistic. Maybe it should be more like 1.5 to 1, or even 0.75 to 1. And you're probably thinking, well, 0.75 to 1, that's a bad strategy. But what if you won 90% of those trades? Then it's not. You win 9 out of 10, it's not. And I'm going to illustrate that in a minute. So what people aren't doing is really thinking about the bigger picture of their trading and starting from the basic levels of constructing their trading plan and putting it all together. And one of those variables is the risk return. Now, if you know what your risk return is and you're actually in the trade, it's going to massively help your trading psychology. It's going to massively help you become more disciplined and consistent in your trading, and that in turn will improve your trading results. So you look at YouTube videos and go, yeah, this strategy works, do it 2 to 1, but do your own research and analysis first before committing and stumbling from trade to trade. So step 1, understand your potential results that you're looking for in the risk return at the bigger picture. So you've done 100 tests. Statistically that's not that great. Really, you need more than 1,000, but maybe you want to do live trading but with small size and work out a set of data that gives you that risk return number. My other tip here is create a spreadsheet, download the data, see what you're getting. A lot of traders, again, just do the trade, forget about it, move on to the next one. They're not seeing what the results are. Knowing these numbers are crucial, because on the flip side of trying to keep you in the game, you can then start to see how successful your strategy is, how often you win, and putting the winning ratio and the risk reward ratio together can take you to the next level. You can start introducing ideas like Kelly criterion of how to scale up strategies, how to optimize your trades better. There's so many other things you can do on top of your trading if you know what your risk reward ratio is. Now, I've put this table together just to make it more illustrative, and I know you're sitting out there probably saying, oh yeah, I know all about risk return, blah blah blah, but I get people coming to me saying, I don't know why my trading's working. I've been trading for years and years, I'm brilliant, blah blah blah. So okay, show me your results, show me your data, show me your statistics. What's your win rate? What's your risk return? They haven't got a clue. They stumble from one trade to the other, wondering why they're getting nowhere. Simplify your trading by just taking on this formula and the win rate, and you can really boost your trading. Start thinking more systematically, more almost robotically, more scientifically about your trading. It's not blinding math here. It's very simple. Get it into your head, start building it into your trading, and you will Notice a big difference. Now this table in front of you, along the x-axis we have a win rate, and along the top axis we have our risk return. Now where there's a cross it means don't trade, and where there's a tick means you can trade. Now let's take some examples. So if I win 30% of my trades and I have a 2-to-1 risk ratio, so again, if you just start from the risk ratio 2-to-1, that sounds good, I get 2-to-1 every time I trade, but you don't realize that you're losing 7 out of 10 of those trades, don't bother, give up, you're not going to make money. On the flip side, here's an example. Some people come to me and go, well, how can you have a risk reward under 1-to-1? And I said, well, you can if you know what your stats are. So for example, if you win 70% of your trades and you have a risk return of 0.25-to-1, that means, for a £100 trade, $100 trade, you're only making $25 back. But over the long term, over those 10 trades, you make money. So this matrix here in front of you just helps cement the idea of the risk reward ratio and why you need to start thinking about it in your trading. What is your win rate versus what is your risk reward? If you don't know that, I'm going to say again, it's going to sound harsh, just give up trading, go and find something else to do, because you're going to lose. And the best ways of doing it, keep spreadsheet, keep data. Brokers make it very easy to download the data these days. You can plug it into various supporting software that's free out there to also do the analysis for you. It's simple. Don't make excuses, just do it, and like I said, you will see your trading results improve massively if you start thinking like this. One more example then, just to really drive it home. So you've done 10 trades, you've got a win ratio of 50%, you have a risk reward of 1-to-3. As you can see there, an example, risking $100 on every trade to earn $300. Our 5 wins netted us $1,500. Our 5 losses netted us a $500 loss. Overall, we made $1,000. That is the whole point of it. It's the overall, it's the bigger picture. Why do 90% of traders overlook this formula? Well, the truth really is they're getting caught up in the excitement of quick wins and forget the long game, the bigger picture. Trading is not just hit and run. You want to make money from trading, you've got to do it over 1, 3, 5, 10 years, and that's a really hard thing to do. But you can do really simple things that make your life a lot easier. Stop focusing on trying to win every trade. Understand your results in the macro bigger picture. Understand the risks you're taking versus the rewards. So you've got to embrace this risk return ratio. Think of it along with the win ratio there, as I mentioned, those two together are a fantastic combination. Now like I said, you can take that on further as you get experienced in trading to then go on the offensive. Use this results, the win loss ratios and the risk reward ratios, into formulas like the Kelly criterion, so you can scale up your trades and become even richer, even more successful. There's so much more you can do with the data and statistics. Analyze what markets do and don't work, what timeframes do and don't work, what risk reward ratios work for your strategy. Put it into the business plan, the trading plan, make it systematic, test it thoroughly, give it a chance to work, stick with it. And like I said, this formula separates successful traders from those that fail. So really, it's down to you. Do you want to be successful at trading or not? You've got to put in some effort to be good at anything, and embracing some of these simple tools, simple ratios, simple math can make a huge difference to your trading. It can elevate you into that 10%. No guarantees, but you've got to try and put all those easy wins that you can on your side to push the probability of you becoming a successful trader more onto your side. So like I said, it's down to you whether you want to put in the effort or not. So Let me know if you've liked this video. Please give us the thumbs up. It all helps the channel. Please subscribe and hit the bell buttons, icons, to receive future content that I will be producing over the next coming weeks and months. And if you want to learn more about trading, new to trading, got a great playlist coming up for you in a minute that you can click through, work your way from top to bottom. It covers everything: psychology, strategy, risk management, trade management, the tools, etc., etc. you need to use. Give it a go, work your way through it, and like I said, you'll come out hopefully the other side a much better trader. And that is coming up right now.